Hey, tackle trader folks, how you doing tonight? It's Coach Holmes coming to you. Another edition of Trade Masters. Something to do with the scheduling mix-up. I'm running solo tonight, so for those of you in YouTube land, I'll kind of go through what we normally do. Perhaps one of the other coaches will be able to sneak in and challenge me in the bravado. But anyway, so basically, what we do with Trade Masters is we have three rounds. We do a delta round, which is directional. We do a theta round, which is time decay, usually cash flow type strategy, and then we do a wild card. And each round, each coach usually picks a trade, kind of explains it, explains the theory behind it, all that kind of good stuff, and then you guys get to pick. Unfortunately, like I said, potentially a scheduling issue tonight. You guys get to listen to me. I've got a few picks here that I'm going to go over, and you guys can, in the chat box, you can put yay, nay, good, bad, whatever you want, really. And like I said, hopefully, one of the other coaches will be able to jump on with me. But we'll get started anyway. We'll talk about the markets first, right? This has been an interesting day. If you're watching the markets today, that's a heck of a rally candle there. That thing exploded, especially after the Fed today. The Fed brings a lot of uncertainty, and the reality is that we got a pretty big blast off here and right into known resistance, which I think is very, very important, right to that 4,300 level. So for me, just when I started looking for my picks tonight, I was very hesitant, to be honest with you. We are at resistance. We do have lower lows and lower highs. We are in a correction type, marketplace at this point in time. And we did hold support, older support down here, a little bounce off there. So you could make the case that potentially, we're trading in a range right now. But again, the market's felt heavy for a few weeks now. And so for me, the rally was nice to see, but I'm a little bit concerned about it. I need to see some follow through tomorrow before I get really, really excited, about the market continuing on. So anyway, we'll go through. Like you said, I think I got 4 or 5 picks here for you. We'll go through them, and I'll explain to you kind of what my thought process was with each one of the picks, just in relation to the market conditions. Okay. So like I said, first up, the markets are what they are. I think the most surprising thing that I saw today was crude oil. Crude oil it just blasted off today. If you were watching it early in the day, it was up a little bit, early in the day. Let me get this up a little bit. It was up a little bit early. But then in the afternoon there, just absolutely exploded. So again, into known resistance, right? All the charts are really looking very similar right now. So really, there's a couple of choices here, right? Maybe we come back down and we hang around in this consolidation, or maybe we break back out and then we've got a new target around, that 115 area there. And would be the next logical spot for a move up, right? So in that vein, I found myself looking for trades, and I found myself looking for a lot of energy type plays, a lot of things to do with oil and energy. They still seem to be doing pretty well, and I found a lot of those for that. So my directional pick for this week was actually Halliburton, and I'll explain all the reasons why I thought it was good. And you guys can comment on, whether you believe it, whether you think I'm crazy or not. But anyway, so obviously I look at this chart, and looking at this chart versus a lot of other things in the marketplace, especially like tech, right? So let's look at Nvidia. So if we look at Nvidia here, Nvidia is just coming off the lows, right? We all know that tech has been getting beat up, right? And you kind of look at something like Halliburton, and even though it had a pretty solid retracement when the market kind of flushed down here, right, and after earnings as well, right, all of a sudden this thing's picked back up with steam. Even before today, before today's ascension, it picked up steam, and now it's broken all those moving averages. Okay, so I really like the fact that This thing kind of took its medicine, found a bottom there, a little double bottom, triple bottom there, and now is working its way higher. So for me, this shows a lot more bullish strength than something that's kind of reversing off the bottom. This thing was doing well before. Again, like I said, had its earnings, got that out of the way. Earnings was a little beat there, not too impressive, but a little beat, and it got punished. But I think that was more about the marketplace in general and kind of the heavy feeling that we had the last week or two. I think that's really what brought this down. But it came down to a very good support level here and took off. And then today, look at the close above these moving averages here. Like, this is absolutely fantastic. These are kind of trades where I have a little bit more faith in them. Above the 9 moving average weekly here, closed above that. That's always a big target, right? We want to be above that, and we are. And so really you look at this, and to me, this seems like a very easy trade to take. Now, having said that, my overall theme of the market is I still feel that it's a bit heavy. So I don't want to go all in, on bullish trades or bearish trade. I don't want to go all in on anything right now because I still feel that these rallies need some follow through before we really get excited. So for me, I looked at this and I thought, okay, what kind of trade can I do here without breaking the bank, right? Without spending, putting a lot of risk out there just in case, maybe this is a one-day wonder. Right? Maybe that resistance I showed you on the crude oil chart, maybe it just turns down and takes off to the downside again, right? Who knows? It stays in that consolidation. If that's the case, what does it do to Halliburton? What does it do to the oil companies? These are things you have to remember. So for me, I just looked at a directional trade here. I thought it would be very easy to get from 38 to potentially back up to this high, which is about 42. Okay. So when I started thinking about this trade, I thought, well, shares are cheap. I could buy some $38 shares and just ride it up and that'd be fine. But really, if I had to put a decent stop loss in here, I'd have to be probably down here in this neighborhood. Okay. So, definitely below the low of this candle. And if I got my ATR, let me just add my ATR here real quick. Add that on. So if I look at the ATR on this thing, you're $1.75 ATR, 38. So I need to be at least $1.75 away, which would be in the 36 neighborhood. So I'm down around the 36, 30, 35 and change neighborhood there. So you're taking a couple of dollars worth of risk really just to be outside of that general ATR. And so if I bought 100 shares, you're looking at $200 risk there. Like I said, right now, I don't feel that comfortable pushing all that much. So I started to look at some alternatives. And for me, the alternative was looking at a bull call spread. Okay. Going out to June 17th, because 16 days is a little bit short. It needs some time to move. It moves $1.75 a day, so it could be there in a few days, but I like to give it a little bit more time if I can. And the sweet spot really is that 44 level. So my trade here is very simple. I want to buy where it's at. So buy at the money, which is the 38, and I want to sell where I think it can go. Right. And at the end of the day, I think it can get to that 42. So now I've got a $1.49 debit here. Okay, let's analyze this trade. I got a $1.49 debit, and I got to get this to scroll down. So $1.49 debit, and potentially make about $2.50 on the option if it gets to my destination. Okay, so that's good. That's not great, right? I prefer 300 because that's a 2-to-1. But I can also look at this chart and I can be assured that if I even took my normal stop loss, okay, so let's just say 35.90. So if I look at my 35.90, 35.90 is right about there. So now I'm risking about $50 essentially, maybe a little bit more, obviously, as time moves on. Risking $50 to make 250. That's a little bit more exciting as far as I'm concerned. Now, maybe I don't want to be that tight. That could be a little tight there. So let's say we could get down below, kind of where it stemmed the tide here. So 34.75. Let's look at 30. $34.75 there. Okay, so $34.75, all of a sudden my risk is about $70 for a potential of a 250 gain there. So with this particular trade here, I'm very happy with the chart, the way it looks. Very happy with the strength that this thing has been exhibiting for a while. It's in a space that's very strong, and now I've got an opportunity to spend a little bit of money, 70, $80, depending on the timing, and potentially make 250 there. So that's kind of my trade on Halliburton. How you doing, Matt?
You know, Greg, I'm doing absolutely fantastic. I thought I'd come over. I saw you were rocking solo here, and I thought I'd come over and hang out for a second, give you a little companionship here today in Trade Masters. And I see your first pick there is Halliburton, correct?
Yes, sir. Yeah, it's one of the ones that I just was kind of telling the folks here. It's held up pretty well, even after its earnings and the weakness in the market. It's really kind of held up pretty well, and it's a strong area of the market, and that's kind of what caught my eye on this particular trade. So,
well, you know, the 35 level of support certainly had a chance to get broken here, Greg, and it didn't. And you got to respect that. When support is built the way it did on Halliburton, it reclaimed all your moving averages, and then on today, you got a hammer candle breaking back up above all the moving averages there. You got some momentum in price action. Yeah, I like the edge to the bull here. And, you know, I mean, the market had a really good day post Fed, and we'll see if we can get some follow through here. But even if not, you got to like the support build off 35 here.
Yeah, and again, there wasn't a lot of charts. I was telling the folks earlier, there wasn't a lot of charts where I saw strength, you know, preceding this. You know, I looked at the tech sector, and the tech sector has been so beaten up that we're now kind of looking at reversal analysis as opposed to retracement analysis here. And so this is kind of what I was gravitating to when I was looking for my trades today. And this one popped right out, and it was the one that I thought was decent for a directional trade. So.
Well, I certainly like it here, Greg. Are we playing Delta Round? Is that what we're doing?
This is Delta Round, my friend.
This is Delta, and so I get a go. Is that how this works?
Absolutely.
Oh man, you know, Greg, I was sitting over there in Discord hanging out, just kind of. I was about 5 minutes late there, Greg, and I'm like, yeah, I'm just gonna relax, hang out, enjoy Trade Masters, and all of a sudden somebody says, "Hey, it looks like Greg's rocking solo," and I'm like, What? What do you mean Greg's rocking solo here? So, you know, it's a pleasure to be here, Greg. I got to disconnect from Discord. It was messaging me in my ear. I'm going to go Delta Round here, Greg. I'm going to go with the breakout here. And if you don't mind, if you can give me some analysis on Exxon Mobil here. Energy has been very strong. It's been the number one leader in the market. That's first and foremost. And you've really got to respect the strength that we've seen in energy coming over the course of the last few trading sessions. It had some weakness with the market. It's responded very aggressively back to the bullish side. And, you know, when you're taking a look at crude oil has rebounded very, very well coming into that 108, 109 breakout channel. And it's on some news that is pretty bullish for the oil market in general, given the fact that the European Commission came out and just announced that they're looking at a 6-month time periods to where they're going to be phasing out all Russian oil. And, you know, oil had a very good day today along with the market, but it was doing really healthy before the Fed really kind of came out and gave a dovish lean to the marketplace. It held up in the face of that. Energy itself has had a very, very good quarter from a price perspective. It's had a very good quarter from an earnings perspective. This week, we've seen just awesome earnings reports coming out. Exxon Mobil is certainly a leader in this space. And what I like about what Exxon Mobil is doing, it's not just a breakout on one time frame, Greg. We're looking at a multi-time frame breakout. If you look at the weekly chart, you can really look at position analysis here. You can look at swing trader analysis here, but I like that $90 breakout here. It's clean at 90. And if you look over the last few years, you do start opening up a little bit past 90. Pretty simple trade setup here. Breakout, you put your entry above the high of today. It's getting it above the wick from a few weeks ago. You're getting it above the high of the day. Stop loss got to be underneath 90. And I like just a directional swing trade that allows you to do some position style analysis. with that stop loss placement, and you just ride the momentum here. And so I'm going to come in off the turnip truck here, Greg, and I'm going to go with Exxon Mobil on a multiple time frame breakout. And I love this space right now.
Yeah, there was the same analysis I really had for Halliburton, before getting started. Oil's been solid. It's held up so well in the face of everything else that you can't hate it. You know what I mean? Just especially with everything else just basically getting trounced. Even the other, like say 2-3, like last week, mid last week when everything dropped. I mean, literally everything dropped. The energy space, yeah, it took a little bit on, on the chin here, but Exxon Mobil had one red day. You know what I mean? One red day. How can you beat that, right? There was a lot of other things like metals and things like that that had a lot worse days. So yeah, I love the trade here for Exxon Mobil, and love the energy space in general. So yep, nice pick there, Matt.
I thought your pick was great too, Greg. We got Halliburton off the retracement, really good support level at 35. We got a multi time frame breakout here on Exxon Mobil. Looking for some strength here, Greg. I like both of them.
Hey, yeah, did say breakout?
I heard breakout. I did. I heard breakout, and I heard breakout, Frank. See, this is what happens. The call went out. Greg's alone.
We can't leave. We
can't alone leave. On an island.
We can't leave Greg alone. That's not good for anybody.
That's right. They don't want me to break YouTube. They can't leave me alone.
It was Greg. It was just too much, Greg.
Yeah, too much, Greg.
Just too much, Greg. Too much power, my friend. Too much power, my friend.
Too much power in one man's hand.
All right, Frankie, you're here there, buddy. You've seen both picks. You got the Halliburton retracement, reclaiming all the moving averages. You got the Exxon Mobil breakout. Which one do you like here?
Yeah, they're both solid, and they'll both realistically roll together. But I lean towards the breakout on Exxon Mobil to nobody's surprise, right? I always prefer, all things being equal, I generally prefer a breakout unless it's like a flag into the 9, right? Yeah. So Halliburton, probably not its fault that it pulled back. And Greg's right. I mean, it held up and it looks really, really constructive on this chart, I would say. But I just prefer breakouts to, I don't want to say that's a deep retracement because that would be a little bit extreme, but a little deeper than I personally tend to gravitate towards. But both solid choices, I got to say. Probably just take one because they're both in energy, but I like them both. And I wouldn't fault anybody for picking one versus the other.
I would fault people who picked Halliburton over Exxon right now.
Of course you would. I know where you guys stand.
No bias here, though.
hey, we gotta put this poll up. We gotta know for sure. We gotta know what the people think.
So. Let's put the poll up. Halliburton or Exxon? Which one?
My man Tanyan will take care of that. So. All right, so next up we got our Theta Round there. So I'll go first on this, and you know what? I'm not gonna stray far from the energy business. Actually, I had a couple of different Theta trades that I wanted to do, but this one came down, and I just thought, you know what? How can you not go with strength? So very much similar to my Halliburton. The difference here, it reclaimed all the moving averages. All the same chatter that we had before. Pretty expensive stock here on the oil vectors here. You could play this delta wise. I looked at this and I thought you could play this delta wise if you wanted. I actually looked at this and I thought, because it's such an expensive stock, I prefer to play these kind of, from a credit standpoint. So for me, looking at a bull put spread here and getting below all of this recent downward movement there, that to me gives me a warm fuzzy feeling about being able to collect some cash flow, get some Theta in my pocket. So what I looked at was 250 as a level here. Okay, first of all, it's got some old resistance at 250. It's a round number which people pay attention to. It's a specific round number in $250, all that kind of stuff. I felt if I could get below that and still get a decent return on a bull put spread, this is an area that I wanted to play in. And so what I looked at here, I kind of have my own rules here. I always look for the shortest time frame where I can get at least 10% credit for the spread. So what I did was I went to the May options, May 20th. I went to my 250. I said, okay, 250 is my line in the sand. Okay. I went to my 250. I sold that. and I bought the 245. Okay. And now this is a bit of a wide bid ask spread here, but this is pretty liquid. So I'm not too worried about that. I would take anything over 50 cents here. Okay. You might not get the full 57, but 55, 53, still very happy with that because I've got, like I said, I've got at least 10% of the spread here, and I've only got to deal with this for 16 days. That's a very short time. That means my my daily theta count is up, which I really, really like. And again, all the same analysis that I had on Halliburton, this actually even looks a little bit stronger with this candle today. We're getting some moving average crossovers. Any follow through here, I'm very, very happy. And even if it doesn't follow through but trim sideways, I'm still very, very happy from a cash flow standpoint as well. And again, I don't have to put out a lot of money or a lot of risk for a really big dollar stock here by doing a cash flow trade. So again, stayed in the oil space for all the reasons that we talked about. And I just really, really liked this particular setup, and the credit was decent too. So
what'd you get on the credit?
57 was what I saw.
7 against the 5.
Yeah, against the $5 spread.
What's the ATR real quick?
ATR is $14.
$14.
Yep.
So you're like 3 ATRs. You're getting about 12% ROI, right?
Somewhere in that ballpark. Yep.
Underneath support, playing the oil market. I like it. Greg, Frankie, what do you think of this theta trade for Coach Greg?
I like it, but I'll be honest. I think I like playing energy a little more directional right now. So I like his delta trade a little better, but I am biased. You know me. I definitely lean more towards the delta side as a general rule. So I do like the trade, but I prefer my exposure and energy going into this new wave of potential trades in the space a little bit more directionally focused. Personally, that would be my only real. No, Greg.
Yeah, it's a good setup. I mean, structure wise, you're getting about 10% ROI. You're getting about 3 ATRs on the range. Your delta, what was your delta there, Greg?
Delta was,
I believe your delta
right around 20.
Right around 20. So, I mean, the roids on it's going to be.
Sorry, actually, no, it was even less than that, Matt. It was 13.
13. So that's much better then, because if it was a 20 delta, the roid would have been like in that 60 range, which is right there, kind of the minimal standard here. At a 13 delta and a 10, 11, 12% ROI, you're going to have a good roid. And roid is ROI divided by delta. It's a way that we categorize at Tackle Trading the quality of maximizing range versus credit and probability with the delta for, credit spreads like bull puts, bear calls, and iron condors, and so on. 13 delta is a really good credit for somewhere around that 10% ROI. I like the trade, and you're underneath support. So I definitely like that. I'm gonna go to cyclical. We're gonna work in industrial transportation, and I'm gonna bring up a stock that we've talked about in recent history, both on the I believe it was on the options report from last week. We brought it up. I might have been a TradeMaster pick last week as well, but I still like it. I'm going to go to American Airlines here. And, and the reason I chose American, there's a very specific reason, and you'll be able to see that reason if Greg wants to add the very, very important 200-day moving average, which should be color coded as green from a moving average perspective. I had to, Frankie.
Yeah, I know you did.
It was just there. And I'm like, what are we doing? Give me that green. Come on. Give me that green.
It's got to be green.
Okay, I feel like we got a good pocket here for a theta trade, and American Airlines does have a decent technical setup in general. Nice little bullish retracement coming into that 200-day moving average. But what I like here is I like a naked put from a cash flow perspective, and I like it right at 17.5. And I like it at 17.5 for a very specific reason. Number one, $18 is the short-term support level. Number two, it's underneath that very important 200-day moving average, but you also will see that 50-period moving average right there at 1750. And so you're basically saying, I want a cash flow as long as it stays above 18. That's where the support level is. I want support to work for me. Underneath, right there at that support level, you got the 200-day moving average. You got a little bit of momentum with the 9 EMA and the 20-period moving average. American Airlines had a really strong day here today. And I'm saying, okay, let's work with support. Let's take away some of the directional risk of the market. We know we're getting good credits out there from where volatility is. Let's go find an area on the chart I'm willing to take possession if I have to. And if you have to take possession simply because 18 fails, that's one thing. But you got that 17.5 support level that's been pretty decent for American. You got that backstop. I like that. And so 17.5 is chosen for a very specific reason, to let that $18 support level work for you, and then to have the backstop of the rising 50-day moving average to work for you as a support level. If it starts working into that level, you're willing to take possession. Now let's go to the option chain very quickly. We've kind of selected the area on the chart I'm comfortable with. I like 16 days here. You know, I was looking at the 44-day contract too, Greg, because I don't mind going out more time and maximizing range here. But if you go to the 44-day contract, I truly think it's a different type of strategy. I'm looking for cash flow here. I'm not necessarily looking for possession. But if you are looking for possession, selling something deeper out of the money, having all those moving averages work for you, that makes a lot of sense. But once again, if you're just looking to get that cash flow right now, I like working in that 16-day contract. I like taking advantage of the volatility, because typically speaking, if volatility is not high, it's tough to get a credit to where you want to on a stock like American Airlines. But because volatility is higher, we can work to a shorter time frame. We can look at that 17.5 contract, and right there is the 19 delta contract. If you go ahead and sell that 17.5 contract, you're going to bring in about $27 in cash flow per contract. Now, if you confirm and send, you can kind of see where that margin requirement is at, and you're going to have to put up about, depending on your margin here, if you're going to sell.
This is Canadian
off.
margin.
Yeah,
this is Canadian margin, bud.
It's 170, but and so you're going to have to trust me on this. Here, it's good to be an American, guys, and you're seeing why right here. But you're getting about $27 in credit. It's about $200 in margin. That's putting up about that 10% against the strike price. So it's about $170 in margin. You're collecting $27 per contract. You're selling a 19 delta. That you got basically 81% edge on probability from the strike you're selling. You got a lot of support working for you. You're bringing in $27 for the $1.70 in margin. Last I checked, that's about a 15% ROI. I'd have to actually do the math. I'm just doing it off the top of my head. Real good credit for a very short time frame with some real good support working for you, and a theme that, you know, there's no theme in the market that is significant right now. The only theme in the market that is significant right now is uncertainty. But if there is a theme that could emerge coming out of this, you heard Jay Powell talk about the strength of the economy today, and he talked about that with a little bit of gusto. Can the economic reopening catch a bid here? American looks like it wants to go. I'm just looking for a way to generate a little bit of cash flow in a very high probable environment, but trying to maximize those support levels, because we know what volatility can do to them. So my pick, naked put on American from a cash flow perspective. What do you think, Frank?
Listen, you had me at American Airlines. I'm a little biased on this one, and I'm a little directional on this one. Greg and I.
You're speaking your book here, then.
Yeah, Greg and I. We prepped a few last night in the coaches show, including this one. So I really like it. And if you want to play it a little more conservative or cash flow like you've done here, I think it makes perfect sense. You're getting a good return. Like you said, you've got a lot of glue to hold that zone up if it does want to struggle or anything along those lines. So I really have no objection to the cash flow play on this one. Just speaking the book a little bit, and I'm a little bit more directional is all.
I figured you were a straight call or stock here.
So it was actually a bull call that I went with. Bull call? Guys. Yeah. So nice little cheap one. 2023.
2023?
2023.
You're slide out. So
just a little bit out.
You're expecting some movement there, young man.
So I wanted a cheap way to capture maybe some movement, and hopefully we'll get that. We'll see. But I like your trade idea. I do.
Yeah. I full disclosure, I was not in the coach's show. So I don't know what you guys prepped last night.
We prepped a couple.
We picked a couple.
I figured you did. But I like that. I like that slide out of the money bull call spread too. I think that's a wonderful trade.
Well, this area, the one of the things sorry, Frank, one of the things we were saying last night in the coach's show was,
why can't I see you?
Probably because I forgot to turn my camera on. Sorry.
I see you. Like I'm talking to the tackle.
He's become the man. He's become the man in the machine.
So we were talking last night that this is one of the few areas with all the turmoil that we've seen in the markets recently. This is one of the few areas that's still been making higher lows and higher highs, right?
Yeah.
So having said that, this is an area where you're going, hey, you know what? Regardless of all the crazy volatility and all the other stuff that's going on, we're still getting pockets of the markets that are giving us opportunities. And airlines has just been one of them. This is a classic pattern, a classic retracement pattern. It's above all its moving averages, which we have to want to get involved bullishly. And yeah, it's all been setting up pretty good this way. So definitely a trade that
it really wants to hold that support level. It's tested that support level, 5 times over the last 5 trading sessions.
Yeah.
Even the one where it broke it came right back up. That's that defensive nature that you want to see in the market sometimes when you're dealing with volatility, you're dealing with uncertainty. To have a stock hold its support levels in the face of volatility, that's what we talk about with the market or a stock playing some defense. American did it well, and now it's confirming on that short-term retracement.
And I think the funniest thing we said last night, or I guess not we, but me, was I find it funny that airlines are now defensive. You know what I
mean? Dude, everything's defensive in the world of high beta girls right now.
Yeah. So anyway, that's I like that trade.
All right. So we got a poll again?
Yeah, we should. I think Tanya will have that up right shortly. So we got American Airlines versus OIH, high flyer versus, a really cheap stock, right? That's, even if you weren't playing this as a cash flow, which we were, you know what I mean? It's a $19 stock. Like we talked about this last night as well. Like for $19, I'll just buy some shares and let it ride. You know what I mean? So you can play it both directionally and cash flow as well. So,
well, that's why, naked puts on low dollar stocks, bull put spreads on high dollar stocks, kind of the general rule of thumb there, right?
Yeah, for sure.
Yeah.
All right.
Wild card, buddy.
Wild card. Well,
wild card. Let's do this.
You stole my thunder, of course, but you did.
That's what I do, bro.
You had no idea.
I do.
Yeah. Okay.
I stole your watch list, Greg.
Yeah.
You didn't know this.
Settle down.
I was like Hillary Clinton in a debate. I got your watch list.
There you go. So my wild card pick goes back to UAL. Sorry. So another airline, different pattern, right? Different pattern. Frank and I think we talked, I don't know if we talked about this one last night or not. I think we did. We talked about a breakout trade here. So this was, I think this was on one of our reports as well.
Yeah, that was the stock report. Correct.
Yeah, the stock report. So, it had a nice gap up after earnings, came back down, held the 9 very, very well there. Like, it tried 4 times to get underneath that 9 and at no time was it willing to do so. So I really kind of like the way this is held up in the face of everything. A very strong gap after earnings. And for me and Frank as well, we were just looking at, I was looking at a breakout trade here. But my problem with just looking at this as a breakout trade is the uncertainty that you just talked about, Matt. I look at what's going on in the markets. Like if we go back to the futures contract here, like, yeah, today was a fantastic candle, fired off, excitement for the bulls, everything, but we came right up to this resistance level at 4,300 here. Okay. So I don't know, nor do I think anybody knows whether this is going to come back down or whether it's going to break out and start challenging some of these other levels. So having said that, the theme that I started with tonight was I don't want to get too risky until I get some kind of follow through with the move that we got today. I'm happy to see it, right, for my bullish positions, but I need a little bit of follow through before I get super excited about anything going on. So I looked at this one and I thought to myself, how best can I play this where I'm controlling my risk? And so I thought, okay, well, I could play it as a stock. I could play it as a bull call. I looked at all those options and they were not expensive, but a little more expensive than I wanted to put out. So what I ended up doing was I looked at this as, okay, what trade can I put on that if it just craters and goes completely against me, that I'm not going to be too worried about the risk. Okay. And so for my wild card pick, I looked at a broken wing butterfly. Okay. And the reason I looked at the broken wing butterfly here is I want the breakout of 52.50. It could stop at the 55, this candle there, that's potential. I think it's personally going to get beyond that because it's a $2.30 ATR. But ultimately, I believe that it could get back to 60, if it gets some legs here. And if we get some follow through in the market, I think we could really make that leap. So I don't think it's out of the question to get back up to that 60. So the way I looked at it was, what kind of trade can I structure? So what I did here was I went and I made a broken wing butterfly. I went out to June. I believe it's June I used. I always, when I do my broken wing butterflies, I sell where I think it can go, and then I buy the wings out. So what I did on this trade here was I sold the 60 because that's where I think it can go. I bought the 62.50, and I also bought the 55. So 97-cent debit here. You might have to pay $1. There's a bit wide bid-ask spread here, 12 cents or so. You might have to pay $1 for it. I'm still okay risking $100 on this trade for the potential. And again, for me, $97 is a trade where I can put this on. If the market gets if it gets out of whack and gets more volatile and crazy, if I lose $97, that's well within my pain threshold. So I'm not worried about that. If it happens to get up to that 60 and pin up there, well, I'm looking at about 4-to-1 return, right? Around $400 for $97 risk. If it actually gets beyond that, again, maybe the market clears up, maybe the economics that Jerome Powell spoke about, maybe that's a catalyst to make the markets move. If it continued way beyond that, I still have the potential to make about $1.50, right? $153 versus a $97 risk. So for me, this came down to the uncertainty of the markets, being able to set up a trade where I was happy, where I could just let it go. The $97, if I lose it, I'm okay with it. If I get to the spots that I want to get, I have potential of 4-to-1 or 1.5-to-1, which I'm happy with both scenarios there. Even if I didn't get the full Monty, maybe it gets there in a week or two, and I only get $100 or so on the butterfly. If it hits my strike there, the 60 strike, I'd take $100 for a $97 risk. I'd take 100% all day long. So a lot of options there without too much risk, and that's really what I was looking for in my wild card pick. Was I was looking to just keep my risk in check right now. Frank and I talked about this last night on the coaches show. You know what I mean? There's a lot of uncertainty, volatilities, affecting a lot of different things. And if you're not sure, keep your risk small. You'll be happy you did. And that's kind of my thought process for this trade.
Like a risk adverse wild card pick, broken wing butterfly. I like it there, Greg. And United looks strong up there at the top. A breakout there would be legitimate. And,
sure.
When you're looking at United versus American, I would say United has more bullish momentum. You just got to love the support build that we're seeing on American, but both good picks, in my opinion. Like a good American, Frankie, I'm outsourcing my next pick to you, though.
I like it.
And see, that's what happens.
This is a tag team match. This is what this is.
When you call for Batman brings strength. That's what happens.
We're making our own wrestling stable.
I was going to say,
right.
which one of you is Robin?
Baby.
Which one of you is Robin? That's all I want to know.
Dude, he's Robin. He's Robin on one day. I'm Robin on the next day.
Yeah.
It works both ways. We'll argue as Batman later on, Frankie.
I like it. Sounds like Frankie, a good way to spend an evening.
Honestly, I was about to pitch the first wild card day trade in Trademaster history.
Ooh, all right.
Oh yeah, I was hanging out in Discord earlier today when Jay Powell was talking about the whole central bank and the raising of interest rates. And, basically we were just, there's about 15, 20 people there, and we were just kind of talking about it. And I was answering questions, and I was asked a question about 15 minutes into the press conference, and the market was volatile, but it was responding bullish. And they asked me, what do you expect technically here? And I said, you know what, we still got an hour left in the trading day, but the simple reality, I kind of feel like this is done here. Look for some consolidation between 4,280 and 4,300. That's what I think you're going to see here. And what you want to see over the next 24 hours or so, you want to see the market play some defense at the top here. And you know what? It's kind of what we got. We got some consolidation between that 4,280 and that 4,300 zone. And if you look at 4,300 on that 30-minute chart, you're going to see that as that little breakout channel. And so I came really close, Frankie, to pitching a European open day trade, carrying it through similar to the go to bed trade that I used to teach in the Forex market, where you basically take a trade on the euro dollar cross pair or the Japanese yen dollar cross pair. You put your stop loss, manage the stop loss overnight, and bank opens usually have a tendency to pop and then carry through the rest of the day. And so I was thinking about that, Frankie, and the more I talk, I'm just kind of throwing it out there to the community because I like this setup. But
yeah, I can see why you like it.
No day trade today. No day trade today. Maybe tonight, but no day trade today. Frankie, you're going to bring a wild card for us, buddy.
Ooh, all right. I got a wild card. I always hate having to pick one, but you know what? I'm going to go with Dollar General DG here, Greg. And I think this could actually be one for your broken wing butterflies as well. But I'm going to pitch a slightly out of the money bull call on it. If you look at this on the daily, you can kind of see we pulled back in that old resistance. If you look at this on the weekly chart, Greg, you're going to like what you see here. Nice breakout, pull back to the old breakout channel, the rising 9 EMA. Makes perfect sense to me. That's what the market was doing, right? It was kind of selling. These guys have been building lots of momentum really since coming off of those lows. And I'm looking at today as finally starting to show that they want to use that old resistance as a new support level. So I'm going to fundamentally be directionally on this one, right? And where I go from there is going to be kind of, risk, right? And that's kind of how I'm thinking about this one here. You might want a little more confirmation, Greg, get back above those moving averages. But really, I think you could call today's candlestick taking out today's high aggressive confirmation. I would. And if we wanted to make sure we got above those averages or above those highs from last week, we got to pay for that. But I certainly can understand that if that's the route that we want to go. I was looking, Greg, into the June 250, 270. This was actually my Frank's chart last week. I'm sure you probably caught it as it was pulling back, and it just never got the upward movement, never got
caught up in the market.
No big deal because it didn't, at least for me, it didn't get confirmation. And so no harm, no foul. I don't mind it coming back a little bit further. As a matter of fact,
if it stabilizes above 240, I really like it above 240.
Yes, as long as
look at that weekly chart, bro.
Yep.
That weekly chart is really, really compelling at 240.
It's very, very strong, right? And so it looks the way it should, I guess, to my eyes, at least. And I would agree. As long as we hold that 240 zone, nothing wrong with it. I wouldn't even argue too much if somebody said, look, let's let this candle on the weekly play out and get in above its high next week. The risk is it might run without you and the risk to reward's gone, right? So those are the decisions that we all have to individually make as traders. I think it's worth taking a little stab here. When I was kind of going through this for Frank's charts, I was kind of looking at that swing high at around 260, 262 and change as kind of T1 and 270 as 270 to 280 as as target 2. And so anything, above 270 and beyond, I like 270 just kind of as a wimp. But 280, I wouldn't fight too much on. So I kind of like the 250, 270, Greg, for that out of the money spread. It was coming in, about $5?
Yeah, $4.75.
Just a little. What was your strike prices, Frankie?
250 by 270 for the Junes. They don't have Julys, so I went with the Junes.
Can I repitch a little bit?
Sure.
What do you think about a little bit further out in time? Giving it a little bit more of a position, because I just like the weekly chart here.
Sure,
that's my favorite time frame here. And as long as 240 holds, you're going to like any time frame. But again,
Right.
it's the weekly chart, what I really like about it. And so you were working in June, correct?
I was working in the Junes.
Okay.
So
What do you think about a little bit more time frame? Go out 107 days.
Okay, going into August.
And we widen out the spread to a 250 by 280 spread.
Okay, let's see where that went. So
brings you in about a 24 net delta,
so
and you're reducing 30%.
So yeah, so net delta is about the same, lowering the cost a little bit. I don't really have, fundamentally any dramatic issue with that. I will say this though, these guys do have earnings at the end of May, and so that extra time, I wouldn't hold it through May or through earnings personally. I doubt you would either as a trade. I don't know, maybe it's a position trade you would. I would not be planning on holding it through the earnings. And so
I don't hold directional option trades.
Earnings got you here. So go figure, right?
All right, go shorter time frame. You got it.
I do like the idea. Generally speaking, I would have probably looked a little bit longer term, to be quite honest with you, at least sniffed around those August.
Can you blame me for assuming all of earnings was done?
No, not at all.
I'm so close.
Were you begging for earnings to be done?
Maybe I am. Maybe a little bit. I am.
These guys are kind of off schedule a little bit. Luckily, that's going to be a fairly rare thing to say for the most part going forward for the next little while, Maddie. But I do like the idea. Under normal circumstances, I think it's a very viable pitch on it, Maddie. With the earnings,
I might as well cross check, see. But I do agree with you. Earnings negates that position trade directionally.
Yeah, they always get you, right? And so I think that will kind of sell me on the 250, 270. I don't think it'd be a horrible thing if you want it. You pay a little bit more. But you could do sell the 280 instead. I would have no objection to that. Capture a little bit more movement, right? On the way up, open up that risk graph just a little bit for a little bit of a cost. I would have no objection to that. What I really liked about the 250, 270 is 270 was kind of where my initial T2 was, more, it's a little
on the mine was 280 initially. And so that's kind of why I wanted to wrap a 280 spread.
Yeah, exactly. And I think we'd both be happy if it hits either of those targets.
Honestly, if you hit 260 before earnings, you're
probably wrapping up at 260 if you get there before.
You're locking it in and you're closing it down and you're going to open up shop after earnings.
Yep, exactly. Now, I'm not surprised that Greg's put together a broken wing here. And I think this could make sense for that too, Greg, if that was the route one wanted to go.
Yeah, these strike prices aren't that appealing right now. I'd have to play with these a little bit. I think it could get to 260 pretty easily. So that's where I sold it. Like I said, it might be just a little far away there.
Do you see how we all start the actual analysis of strike prices bought and sold with, we think it's going to 260, 270, 280, and all of us started, we're going to sell 260, 270, 280.
Yeah. Well, yeah.
So it's almost like your target's pretty important in a bull call spread.
It always is. Yeah, for sure.
It always is.
All right. That's our wild card. So we have a bull call out of the money bull call in Dollar General. We have a broken wing butterfly in UAL. Tanyan has the poll up there. Matt and the tag team of Matt and Frank have whooped me.
What's our wrestling nickname, Frankie?
Oh, listen, I got to put more thought into it than 30 seconds.
Dude, I want to be the Heartbreak Kid and you Triple H, whatever they were.
So DX, right? DX. Yeah, Greg could be the Road Dog.
Dude,
I don't get to be the Road Dog.
Listen, we gotta find.
Because you lost Trade Masters, bro.
I gotta be Hart. What's his name? Bret Hart. He's Canadian. He's Canadian.
Yeah, there's a few Canadian wrestlers.
Yeah, there are some. Yeah, you got quite a few. You got quite a few to choose from up there.
Yeah, Danny Spivey. Do you remember that guy, Frank?
I remember Spivey. A little bit before my time. But I do. I'm a bit of a wrestling historian, and so I know lots of people that people my age don't know of. So both above and beyond, right?
Yeah, fair enough. All right, so Matt has kind of whooped me. You picked up the first two rounds. Congratulations, Matt.
Did I win the first two?
Yeah, the first one was close, and then the second one, you really trounced me on that one. So we'll see how this third round works out. But congratulations on those 2 rounds.
Dude, that means I am officially retired from Trade Masters. I'm 1-0.
You want to know? So you're gonna drop the mic and leave?
Why wouldn't I? Why won't I? At no point can you ever say you beat me. I'm good.
Yeah, well, listen, this is like any good wrestling match where Greg's the good guy, and it's a handicap.
I'm just setting up round 2, bro.
We have to
I'm just
win,
setting up round
right?
2.
We have to win so he can get his paws on
I'm just
on
setting
us
up
individually.
Got to come out of retirement. You got to beg me to come out of retirement. We got to set up the stage.
I put the bat light out. And next thing you know, I'm getting thrown through a table. That's all. I don't know how this happened, but you know. Anyway, I did pick up one round anyway.
There you go.
The folks like the UAL better than the Dollar General, but still both good trades. Anyway, you guys, that was awesome. I appreciate you guys jumping in there with me.
Yeah, it was fun.
That was way fun, guys.
It's always a good time on Trade Masters. So I'm going to be on the Traders Lounge in about 35 minutes or so. So any of you folks that are on YouTube, Tackle Trading members,
definitely give Greg a hard time for losing to Frank and myself.
Yes, it's just for the handicap match. Please, berate me as much as you can. So, but anyway, it's all good stuff. I appreciate you guys.
It's all in fun.
Yes, it is. Thanks for coming out, and everybody in YouTube, thanks for coming out. Head over to Tackle Trading, 15-day free trial. We get to do fun stuff like this all the time. So. Anyway, we appreciate each and every one of you. Have yourself a great night, and we will talk to you very, very soon. Thanks, everybody.
Thanks, team.